Hi dear traders! Investors are awaiting the upcoming interest rate decision from the US Central Bank. On Friday, producer price inflation results revealed the possibility of a slower than expected decrease in consumer inflation, which means that the Federal Reserve is likely to keep raising interest rates aggressively. In the meantime, other macro reports illustrate high recession risks. Anyway, the American regulator is anticipated to hike rates by 50 basis points this week. Let's now see how markets traded last week. Thus, the US dollar index that tracks the value of the greenback against the basket of 6 major currencies partially recovered and approached the level of 105 points following the release of PPI data in the United States. Traders are now awaiting consumer inflation results on Tuesday and the Federal Reserve's interest rate decision on Wednesday. Taking into account the expected outcome of the upcoming Federal Open Market Committee meeting and the rhetoric of other leading central banks that are likely to tighten monetary policies more aggressively than originally anticipated, the dollar has already dropped by 7% from its 20-year peak recorded in September. The euro-dollar pair managed to return to the levels it traded at 5 months ago. Although traders expect the European Central Bank to lift interest rates by 50 basis points at a meeting on December 15th, they are now more focused on the Federal Reserve decision. The euro settled above 1.05 due to a weaker dollar. The pound-dollar pair went up as the greenback edged down and the investors welcomed the UK government's new budget plan. Still, it's important to remember that the UK economy is now facing real recession risks while the Bank of England keeps tightening monetary policy. In fact, the British Central Bank warned the country would face a 2-year slump. In this light, it would be unwise to buy the pound-dollar pair now. Meanwhile, the Bank of Japan is still on track to its loose monetary policy stance. When evaluating the readiness of the Japanese economy to change, the Bank of Japan is guided by growth in wages. Thus, the yen was unable to benefit from a weaker greenback and fell slightly against its American counterpart last week. At the same time, gold settled near the resistance level of $1,800 a troy ounce. The precious metal is highly sensitive to any speculation about the monetary stances of leading central banks. This week, gold will trade under the influence of interest rate decisions from 3 regulators: the Federal Reserve, the Bank of England, and the ECB. In general, amid high interest rates, demand for gold decreases and vice versa. Therefore, the bullion returned to the key level of expectations of a reduction in the pace of rate hikes. A breakout through this barrier will lead to a further surge in the value of the precious metal. Meanwhile, crude oil prices are currently shaped by factors such as political news and high recession risks. Last week, BRENT dropped to its yearly low of $76 a barrel. Due to the possibility of a global decline in energy demand, Russia's President Vladimir Putin hinted at production cuts in response to the G7's price cap on Moscow's crude exports. The Kremlin's official response will come shortly. These are the trends of the last trading week, and now a new week and new important macro events are ahead. Do not miss our daily news reports to be always in touch with the most relevant information. See you.